It's time for another RIN TV Rewind, where we look back at some of the highlights from RIN TV over the first 6 months of 2014. Earlier this year, the president of Marsh International joined us to explain the downward trend in global insurance pricing. It was one of our more popular reports, for good reason.
Retail insurance rates around the world trended down at the close of 2013, according to Marsh's Global Insurance Index. In fact, the only region to experience a rise in rates was the US. Here to discuss global pricing trends is David Batchelor, president of Marsh's International division. David, welcome to the programme.
It's good to be here.
So David, Marsh reports pricing was down in virtually all regions at the end of last year. Aside from the US, what's driving property rates lower in other regions?
I think there are three main drivers. One is the availability of capacity. In the primary market, supply was plentiful. The second is that in 2013, there was an absence of major catastrophes. It was a benign year for the insurance industry. And finally is the new capital that is entering the reinsurance markets from private equity, from hedge fund, from pension funds, which is driving pricing of reinsurance for the primary market. So when you collectively put those three factors together, it really did create a competitive environment for the property market universally in 2013.
What did you see in the casualty lines?
In casualty, it was a similar story in the sense that there was available capacity and that drove prices downwards generally. There were some areas of stabilisation, but in 2013 we saw a pretty competitive casualty market driven by the supply part of the equation.
Marsh reports D&P for financial institutions in the EU were down or stable, except for Italy and France. What's happening there?
What we've seen in the financial institution market is underwriters looking at their portfolio over time and in some cases taking a bit of a stand back and looking at the impact from litigation and regulatory changes and see how that translates into claims. And certainly in 2013 we saw in Italy and France a recalibrating by underwriters of the financial institution risk, mainly for larger financial institutions, and that's what we have reflected in our view of the rate environment in those two countries. They saw some increases.
Were there any surprises?
I think we came into 2013 with the expectation that it was going to be a competitive rate environment beneficial for clients. And I don't think we've been surprised by what we've seen. And I see that really continuing into 2014.
We know it's early, but where do you see rates heading in 2014?
Well, as I said, I think that 2013 sets the platform for another year of potentially competitive rate environment. The capacity still exists. I think that if the losses continue at their current level and the stability of the capital and surplus position of underwriters, we see another competitive rate environment for clients in 2014.
Throughout July, we are rewinding highlights of popular reports from the last 6 months, all viewable from our on-demand library. So keep it here for even more world risk and insurance news on RIN TV.